Hey there, it's Tricia with Easy E-mini Trade, and I've been getting a lot of questions about the Slinky and using the anchor chart. And the anchor chart is basically a larger frame chart than what we're currently taking our entries off of that we look to confirm taking the entry off the smaller frame chart. And I'll show you what I mean here in just a second. If you've got questions, you can always send me an email, tricia@easyminitrade.com. And this is the same as described in the webinars that I've done on using the Slinky and an anchor chart, as well as what's in the ebook. So just go through the settings, practice. You can easily go back and mark the setups after they occur if you're having trouble with them. But hopefully this will help straighten any questions out that you've got, okay? Okay, so what we're looking at is I've got the NQ on a 4-range chart. That's where I like to take my entries from. It is a very small range chart, but I like it. If it's too fast, trade off something bigger or use a tick frame, time frame, whatever you like. If you're trading off a larger frame chart, you realistically don't need the anchor chart. The anchor chart is to help us with eliminating the noise on the smaller chart, because a lot of times you'll get the back and forth, go nowhere type of setups. So this anchor chart here to my left on an 8 range is what's going to help me eliminate the noise. And I generally recommend 2 times the size of the chart that you're taking your entries from for your anchor. So in this case, I'm trading off a 4-tick range chart. Each bar represents 1 point in price, so my anchor chart is an 8 range. You can use 3 times if you like. You can use a 12 range. If you're trading off, 1-minute chart, then I would say use a 5-minute chart, for example, as your anchor. If you're trading off a 5-minute chart, realistically, you don't need an anchor chart, so you're going to have to do some work for yourself too. You can't just take everybody's word for everything. Put the work in, check it out yourself, and see what's going to actually work or not work. Okay, so this is a breakdown, so let me just scroll ahead here to our first Slinky. So here we get closed above the indicator, and it was a no trigger because what I like to do is I like to put a buy stop a tick above the setup bar, and I want to be triggered on the very next bar. So the very next bar didn't trade up to trigger me. You can use stop limits if you like. I don't have any problems with buy stops or sell stops. I might sometimes wind up with a tick slippage in getting in, but usually not more than that, if that. Most of the time it's usually pretty dead on. So enter however you like, but I don't want to get in until I have my close above my indicator here. And in looking at the 8 range, what I'm looking for is I'm looking to see that my green line from my double stochastic, and again, look at the webinar instructions or the ebook to get the settings and so forth on this. I'm not going to go over that right now. But we got our green line above a red line, so we can go ahead and take this as a buy. It just so happened that it didn't trigger. Here on the close below our indicator here at 936, you can see over here that we're still above the red line, so I can't take that as a short. Not for the Slinky anyway. We're going sideways, so you can short off resistance, buy off support. All I'm going to do is go over the Slinky, okay? Here we get the close above the super trend stop here, and again, the settings are not the default settings, so just review your information in the ebook or the webinar, and I won't say it again, but I know I'm going to get a ton of questions, so please just make sure to look at that and get those settings, okay? Here at 937, we get a buy here on the NQ, and looking at our range chart here on our anchor chart, our green line is below the red, so no Slinky buy there. Here we get one at 941, and we are good to go on that one because our green line is below our red line. So we go ahead and we actually took that. And we know that we have support here, the 50% fib retracement. So as we got down there, you'd either have your target down there or you're trailing, and once it's not breaking through, then you get out whatever you're holding. My first targets on the NQ are 3 points, and my initial stop is 3 points. And then once I get my first target, then I have another portion with my stop at a tick better than my entry, and then I have it to trail. So in this case, when it's not going, then I can confirm it with my order flow, which I can use. If you're not using it, then obviously you can't. But when you don't see the sellers coming in there, you can tighten up your stop. Here we don't agree on this buy here. We get closed above our indicator here, and we do have news coming out at 10, so whatever your plan calls for, trading into the news. But here on this buy here at 9:45.07, let's just see where we're at here so you can see the exact time, 9:45.07. It was just under, it was just getting ready to cross. It wasn't quite above. The green line wasn't above that red line yet. It was looking like it wanted to, but it wasn't, so that would be a pass for me. And on the short here, into news at 10, we did not agree on that one because our green line from our double stochastic is above our red line, so that would be a pass. And like I said, not to say that we couldn't take a breakdown here, but we're not going over that right now. We're just going over the Slinky. Here on the buy at 9:51 into news at 10. Wasn't quite there yet, so that would be a pass. And so basically it's keeping us out of the chop. And you could take every single Slinky that sets up without the use of the anchor chart, and what you could run into is some of those go nowhere type of trades where you take every single time you get closed above or below the indicator, and sometimes they go and sometimes they don't. The percentage of these going and using the 8 range is really high. We're doing really well with it, but it does obviously eliminate some trades that do go on to work out. So do some testing and see what you think, if you want to use the anchor or not. And if it goes without you, you can always find most of the time a way in on a pullback or a breakout, so not to worry. Here, this is right before the news, and that is at 9:58.17, and we don't agree for the short yet because our green line's above the red line. Here at 10:02, 10:02.53, not ready for the short yet. Now, if you're trading using the VWAP chart, in this low value area, as long as your order flow confirms, you can still take the short. This one here, this looked decent as a short because we have an idea of where it's going to get to. So this one you might bypass using the 8 range as your anchor because you have a good idea of where support is and where it can get to. So I will be aggressive with a lot of those if I have a good idea of where it's probably going to get stuck. So I've got no problem knowing that if I take this trade against the 8 range that I might get stopped out, but for the most part I'm wanting that 8 range to agree. Here at 10:04 we don't agree, our green line's below our red line, so that's a pass. Now realistically, a buy off support here with divergence to the upside, that would be the way to get in on that as a buy, in my opinion. Here's a short we took at 10:08. Actually, yeah, I don't think I took that one at 10:08. Let's see here. 10:08.10. No, did not agree on that one. So let's color that yellow. Now again, just like the buy off support, you could sell off resistance. Divergence to the downside, you could sell that and still have a way in. It's not the Slinky. Here we get the buy, and it's into a bunch of congestion. We've got the pivot point. Just look to the left and you can see that we've got a lot of support, so now that's going to be resistance. So we get that buy, and looking at the 8 range, we don't exactly agree yet for the buy until a few bars later, so that's a pass. Here at 10.25, we do agree on that buy, and we get in here. I think our entry was 5.25, and you can see here our green line's above our red line, and we're good to go on that. So take that as a buy, and got the first target, then stop move to a tick better than the entry, and then got out up here around 10 on the remaining portion. Once you see divergence in the opposite direction, you might want to tighten up your stop, or at least take something off the table. So here we have equal highs, so we're expecting a pullback when you see that. Here at 10.33, we agree on that short, or did we? Let's see, 10.33, no, we did not. Why did I color that color? There we go. So at 10.33, we want to see our green line below our red, which we have, and this is the exception to the rule, and that's why I had that marked, is you can see our green line is below the red, but our red is still in overbought when we're trying to take this as a short at 10.33 as the time. So that would be a pass. You want this to be out of overbought if you're going to take a slinky short, and you don't want it in oversold if you're going to take a slinky buy, unless you have a clear-cut area that you could expect price to get to as support or resistance. So hopefully you understand what I'm saying there. Now here we're not in agreement because our green line is below the red line to take the buy, but let's just say that this red line from our double stochastic is in overbought. I could take that as a buy. So as long as my green line is always leading, or the red line is in overbought for buys or oversold for shorts, I can take those slinkies. Okay? And this is, my way of doing it. That was a bounce that we took there. So let's get to the next slinky. Here at 11.08, we get closed above the super trend stop here at 11.08. Let's just scroll over here so you can see it on my 8 range. Right here, you can see 11.08 right in this area here, and my green line is under my red, so no buy. Now if you're trading the value areas, you can short off that area as long as you've got sellers coming in. And for me, if I was up at resistance and I had divergence to the downside, that would be a nice short. This at 11.15 here, we had this short set up right here, closed below our indicator, and we took that, the entry on that was, what was it, 21.25, and our 8 range agrees right here, our green line below our red line. And this is a little bit funky how it plots here, but you can see those little pieces there. But anyway, green line below the red, so we're good to take that. And once the first target's hit, looking for either to trail or down here when it's not breaking any lower, you can see here we're coming back to that first high value area there, and it's just stuck. So that's a good spot where it could definitely bounce. So when we get divergence to the upside here, good place to exit on whatever you're holding or tighten your stop. So got a decent amount on the final portion of that as well. Here at 11:31, now the room closes at 11:30, and this happened right after we ended the room, but the buy was valid. The green line here was above the red line, and the red's not in oversold, so we can go ahead and take that as a buy for the slinky. And I just want to point out that if you're going to trade in the afternoon, just be aware of when we find ourselves in lighter volume and also ranging in a really small range. Sometimes you just gotta just sit it out and wait for a breakout or breakdown, because this here, there wasn't a whole lot that you could really do here. What was that at 12 o'clock? Let's see what that looked like here. So realistically at 12:47, so realistically you agreed for the buy here, and that one would have stopped you out on this bar here. That would have stopped you out. You wouldn't have agreed on the short. You would have agreed on this buy here at 12.12, and away you go. So you would have wound up stopped out here, and this one goes on to move pretty nicely, actually. And you can always trail using the super trend stop once price starts to go. All right, so I hope that helps, and I'll try to do some more of these in hopes that you'll get what I'm talking about with the anchor chart. And it does eliminate a lot of the noise, but it does eliminate a lot of trades that go on to work out in spite of the 8 range agreeing or not agreeing. So you just have to go back, mark them, and see what you're willing to do. Okay, you guys enjoy your afternoon.